So this is the pound USD analysis for Monday 20th of November. Now, let's just have a look what happened with prices on the 17th. So we're just going to have a quick look here. So the 17th, we're just going to mark it on the chart. So on the 17th, what we did see was we've had our lows here. Well, on 17th essentially, but more recently we've had a pretty much a double bottom just here in around at 31.40. We have seen some buy side momentum. We've retested that level of 31.40, and again we've had a move upwards. Shallow retracement. You couldn't usually anticipate shallow retracements by the size of the candles, so we've got pretty small candle bodies all the way down to that dynamic level in around a 20 period moving average. You saw this bullish move come here, come just there, and it was followed through by this major candle as well. Very strong candle, closing near the highs, had a further retracement and move upwards. Now we've come up to a level of 31.60, and what we did see was this very strong bearish candle, somewhat counter to this trend to the left of the chart. We have seen follow through momentum taking us all the way back down to the previous swing in around 31.80 level, and briefly breaking below it, and we saw a move upwards. Now this move upwards came into a region that we were previously mentioning that we might potentially see some dynamic well, not dynamic, some horizontal resistance, because the major level we are looking at above where we are at present is all the way up at 32.81. That's a level that we have seen some previous sell side momentum come into the market. I'll just show that on the chart soon enough. But we're expecting 32.81, but we did find some resistance all the way up at that 32.60 region, 20 pips or so away from the level that we were looking at. Now we have seen this retracement all from the previous swing, and now we have come into a region. We did come into a region that we did see a previous resistance in around 32.20. So to the left of the chart over here, I've just marked it out 32.20. We did come up to 32.20, and we did see a pullback from there. So from the 32.20 was I wouldn't say it's a major level. Presently, it's a minor level, but from 32.20, we're looking for further sell-off, possibly back down. I suppose targeting the previous swing might be in around 31.80. It's pretty tight zone, 40 or so pips. And from 32.20 to 31.80, it is a pretty tight zone. But major levels below us, we'll be looking for potentially looking at how prices behave around 31.60 to 31.47. So it's around 13 pip zone just there from 31.60 to 30.47. Now the reason we're targeting that zone is because we've got a 400 period moving average sitting pretty close to 31.60. We're just going to see where the 400 period moving average is at present for reference. Now the 400 period moving average sitting at 31.60. We've got the 200 period moving average sitting at 31.54, and again we've got the zone very strong major level in around 31.47. So in around a 13 pip zone, we do have a major few levels of confluence there. We've got the dynamic levels of the 200 and 400 period moving averages. 200 period moving average here in blue, 400 period moving average here in black. Also the major level, horizontal level of 31.47. So in around that zone, we potentially look for a buy side momentum taking us all the way back up to 31.93. Beyond which we're looking at 30 to 20, the previous swing in the market over here to your left of the charts. We came pretty close there, and beyond which we're looking for the previous swings in the market in around 32.60, but we wouldn't anticipate much reaction there. But we're looking at 32.81, beyond which we're looking at 33.04. Now if we do break it down from 31.47, we don't see much reaction in around that zone between 31.60 and 31.47. We'll be targeting 30.93, which has held as a dynamic level of it has held as not dynamic, a horizontal level of support. So 30.93, potentially looking for buy side momentum to come into market. If we do break that from 30.93, we'll be looking in around this mid 30s before we're looking at 130. I can't anticipate prices getting all the way down. We're at present, we're at 31.93. So we'll have a look at other levels before we get down to the 130 level on the higher time frames. But to the upside, we'd expect upside to be somewhat limited, but due to the fact that we have this very strong bearish candle. But if we do successfully navigate 33.04, the very next major level is all the way up at 33.50. I can't anticipate price getting all the way up there on the 20th, but we expect the far end of the range possibly being around 33.04, the lower end of the range possibly 30.93, depending on the market volatility. We might possibly even trade all the way down to this in around 30. Where is that? 30.60 essentially, in around 30.60 if we do successfully navigate 30.93. So we don't expect much, and we don't anticipate there to be let's just put this another way. So we do expect that to be the far end of the range, in around that 30.60 and possibly 33.50 to the upside. The reason we've got a higher upside target is because if we have a look at this major on the chart here, we've got a series of higher lows. Despite the fact that we've had a heavy retracement from this 32.60, we've got a series of higher lows which are somewhat bullish. So we potentially look for upside targets more so than downside targets, as the most recent trend is to the upside. Now let's just have a look at the monthly, weekly, and daily time frames for wrapping up here. So here on this, let's get scale on here correct. On this monthly time frame, we can see that we are in a somewhat bullish trend. The previous month we did end bearish, but we are still operating in shadow of a very strong September, which is a very strong candle, closing not near the highs, but pretty close to it. I would say it's even pretty close. Yeah, it's a pretty strong candle. So we've had this. Let's just see. We've had this consolidation. We've broken out. Retested 36.57. Now these candles here, I think they're termed hanging mans. I think they're termed. We've got these candles here. We've had moves to the downside, but we've been immediately bought back up. We do appear to be finding some buying momentum coming off this 20 period moving average. We're going to see where the 20 period moving average is at present. 20 period moving average currently sitting at 30.60. So we did mention 30.60 being a level. So 30.60 is where we do have the 20 period moving average. We've seen retracements from our 20 period moving average, and previously 20 period moving average here on this monthly time frame does appear to be a region that we are seeing some buy side momentum, especially last month and this month so far. We did trade below it briefly last month, but we've closed above it. So again, we do seem poised to close above the 20 period moving average here on the monthly time frame. So let's just have a look at the weekly time frame. Let's see where we are. So in this weekly time frame, again, we are in an uptrend, but we've got these heavy retracements. So we've got a series of higher lows. We've got the most recently, we've had a heavier retracement than we'd like to see, ideally, all the way down to this 20 period moving average. Briefly broke below it, but the previous 2 weeks so far, well, the previous 2 weeks, we have seen some bullish momentum come back into the market. So we do look poised over the short, over the medium term for a more buy side momentum and a move to the upside. As we can see just there, and there's the retracement. So the retracement from 36.57 has been a lot deeper than I would like, but I think it's mainly due to Brexit related news and also the fact that the Bank of England had a dovish rate hike. Now, yes, that should wrap up the weekly time frame. So we're just going to have a look over the monthly time. Well, no, we have had a look at the monthly already, sorry. And we're going to have a look at the daily time frame. So we're just going to go over to the daily time frame. Well, let's just get this right. Just bear with me a second here. What is happening here? I'm not sure. Just bear with me a second here. So on this daily time frame, we're operating within a bit of a trading range at present. So on this daily time frame, we can see here, we do seem poised. We do seem to have a bit of a squeeze. So we've got our highs there. We've got a lower high. We've got a low. We've got a higher low. We do appear to be curling upwards. We've got buy side momentum coming to the market, but a degree of I suppose we can see there has been more recently a degree of low volatility, and the reason I've just use that term is because the candles are pretty small in terms of their range. So we do look as if we are waiting for some sort of catalyst at present, despite the fact that we did have the dovish Bank of England rate hike. So we are trending upwards. That's the primary trend at present. So the bias is to the upside. Even though the trend overall has been weak, we haven't seen very strong candles closing near their highs. There are weeks to the upside and the downside, which indicates there is a degree of indecisiveness of the market. The bulls haven't got complete control of the market, and the bears have not taken control. However, the bulls are slightly stronger. So we do look poised to test the major levels just above us that we've previously mentioned. So even though we are operating within a bit of a trading range, which is contracting in terms of its somewhat contracting, so we may see a breakout at some point as we are trending slightly upwards, a possible breakout to the upside. Now, so that should wrap up the pound dollar analysis. So thanks for watching.